There was weakness in the stock market this past week, largely because of some stronger than expected inflation statistics. And that has many wondering if the prospect of lower interest rates is maybe not likely to happen. And that could be the reason for a stock market crash as the Fed keeps rates up. We'll talk about that this week. I'll analyze the markets overall, and I'll show you a very simple strategy that I like to use in the opening half an hour to find stocks to hold for a few days for some pretty good gains. That's all coming up in this week's Stockscores Market Minutes. All right, so investors have expectations that interest rates will drop in 2024. The Fed itself has said that that's the goal. Unfortunately, however, inflation is stubbornly high. This week we had a strong producer price index number, and that caused some weakness in the market. We've also seen gold moving up, which is a hedge to inflation, and that tells us that perhaps the prospect of lower rates is not that likely. Perhaps the most telling thing is the bond market. It tends to predict what the Federal Reserve does with interest rates. I'm going to show you a chart of the bond market in a moment and how it's really not indicating that the Fed is going to drop rates as it remains in a downward trend. There's still not an anticipation of lower rates in the bond market. And the result is that investors remain hesitant to buy the general stock market. They're maybe happy to buy some of the less interest rate sensitive stocks like the large cap tech stocks, which have been really the only major area of strength in the stock market. The broader market hasn't participated, and that's because of high interest rates. Let's take a look at some charts here. This is a chart of the bond market. It's an ETF. TLT is the symbol. So US Treasury bonds. And you can see that when the market started to think that rates were going to go down in November and December, we had that really nice little Santa Claus rally. But inflation has remained stubborn. We haven't seen good economic numbers that point to dramatically lowering inflation. So although there's been these brief blips of hope upward, we still haven't broken this downward trend. And in fact, we're now testing this floor, which means that if this goes down, the bond market is predicting interest rates go up, if anything, or certainly don't get lowered. And so what we need to see on this chart is a break upward through this downward trend line. Now I'll show you the weekly chart of the bond market a little later in the video, and you'll see the bigger picture for this. But for now, the bond market really isn't anticipating lower rates from the Fed. Now I told you that gold has been strong, and here you see the chart of the gold market breaking out to new local highs 3 weeks ago and really strong gains the last couple of weeks. Took a little breather this week, but that's normal after those sorts of gains. And again, the bond market is, or pardon me, the gold market is giving us this indication that inflation is still high and therefore interest rates may not fall. Now, if we jump into our analysis of the overall market, you see here, if we jump to the S&P 500, and let's just go through some of the time frames. This is the daily time frame. I'm going to jump to the 1 month time frame. And the problem that we have this week is we were just starting to test this upward trend line. And we have a slight falling top. So in the short term, the weakness that we had late this week may be indicating that we're going to get some short-term weakness in the market. And if we look at that 6-month chart, this long-term upward trend line on the daily is really being broken. Now, it's not being broken from a falling top, but it is that first sign of concern that we've seen in those large cap stocks. Looking at the NASDAQ 100, again, you see that we're rolling over a little bit. We've had this consistent cycle of rising bottoms on the chart, and now we're breaking that from a little slight falling top. Again, I don't want to say that the sky is falling because it's not really that way. When we look at the 3-year weekly chart, we're still in a good upward trend, and we may just be having a little bit of profit taking along the way. But if we start to break this upward trend line with more enthusiasm to the downside, then I think we could see some profit taking in those large cap stocks and general weakness across the board. Not a strong sign of it yet, but something that we should watch for. And I'll keep you updated here each week. Make sure you're subscribed to the Stockscores YouTube channel, because every week I do this analysis. I'll let you know when we're getting a trend reversal. You know, we had an important trend reversal back here where we broke the weekly downward trend line from a rising bottom, and that resolved with this upward trend. Well, what we're now looking for is, do we make a falling top and break the upward trend line? Hasn't happened yet. We're just taking that first step in that direction. And again, I'll keep you updated. All right, let's take a look at the small cap market, which is much more interest rate sensitive. And you can see it's drifted lower the last 4 or 5 days. Been a little bit quiet for trading the last 4 or 5 days. The upward trend line drawn across these bottoms is just being touched. So good chance it'll bounce back next week and then we're okay. But if we instead start to break down through that trend line, then we're going to have to play a little more defense. Well, let's take a look at the Canadian market, which has lots of those gold stocks and oil stocks, and it is benefiting from that because the mining market has been strong. The energy market is starting to turn up. I'll show you those charts in a moment. And so this Canadian stock market is finally starting to catch up to its American counterparts, because it's really lagged quite significantly over the last little while. Looking at that 3-year chart, it's going to run into some resistance up in here. And so we're working our way up toward that before we will get stuck. But let's look at those commodities that are helping the Canadian market do well. GLD is the symbol for gold. And I said we'd look at the 3-year weekly chart, and there you can see the general upward trend. It's getting a little overextended right now. It may pull back for a couple of weeks, but the bias is to the upside. On USO, our oil market, generally trending up and starting to gather a little bit more upward momentum. You can see here this breakout this week through these highs. Looks like it wants to move back up to this level, and I think there's an opportunity to start looking for opportunities in some of the energy market, particularly in the Canadian energy stocks, which pay a very good yield, many of them yielding 7-8% on dividends, and now perhaps we'll get some capital appreciation as well. All right, we'll keep moving along with the US dollar, UUP. Let's take a look at the 1-month chart here, and there you can see generally downward trending. It's at the downward trend line, which it could break. Now, why would this go up? Well, if the Fed isn't going to lower interest rates, then that's actually good for the US dollar, and you're seeing the market price in some expectations for that. Again, I don't think it's real critical yet, but it is something to keep an eye on. And on Bitcoin, which has been red hot, of course, it is parabolic. The trend is getting steeper and steeper, and we saw a little bit of a break here. I think there's a decent chance we're going to see Bitcoin pull back at least to this level, and it could be all the way down to this lower level. We're starting to see some weakness there. So if you're in Bitcoin, I would be, somewhat cautious, maybe take some money off of the table. Finally, that bond market chart, we're going to look at multiple time frames. So in the short term, you can see the weakness that we got on those inflation numbers. In the long term, we're still potentially going to break the downward trend line from a rising bottom, because there's the downward trend line. We've built the rising bottom. If we can just manage to break this to the upside, then all my concerns that I'm talking about this week go away. But that hasn't happened yet, and so we want to remain fairly cautious. So before I get into my ratings, just want to let you know that we've got some upcoming events. If you ever have an interest in learning more about how to read stock charts, how to manage risk, how to day trade, swing trade, position trade, long-term invest in the stock market, every 6 months or so, I do a round of free educational seminars. If you want to learn those, go to trader training at stockscores.com, go down to upcoming events, and there you can see all the titles. They're free to attend, they're online, they take about an hour each, and they're all coming up in April. All right, let's get into my ratings then for this week. I've lowered my short-term ratings on the US stock market to neutral. Still long-term bullish, it's still in that upward trend. Canadian stocks bullish on both time frames, gold bullish on both time frames. Oil, short-term bullish, neutral long-term, but it is improving. US dollar short-term bearish and long-term neutral. Bitcoin in the short term, I've dropped my rating to neutral because I am seeing some signs of profit taking in Bitcoin, but still bullish long term, and bond market neutral on both time frames. All right, at the top of the video, I said I was going to show you a simple strategy that I like to do to find stocks in the opening half an hour that can be held as swing trades. And here's an example of the sort of things that we use or look for in these. And this is something I do in my active live service at Stockscores every day. It starts out, we want to see stocks that are in play. And the way we know stocks are in play is when they're trading abnormal volume. And so we can see this stock started to trade abnormal volume back on February 26. I know those numbers are very small, but I'm going to tell you that that says February 26 right there. Now, what I like is when these stocks have the initial run, they quiet down, and then they start to move again. And so it started to move again on March 7th, and then this past week, it broke out from this ascending triangle pattern on the 12th, which was Tuesday. And from that point, at around $6.40, over the next 2 days and up into the open on Thursday, we had a move of almost 50% on a stock that, was great liquidity, actively traded, doesn't require a lot of capital because it's relatively low cap stock, so you can take a good position without having to put a lot of money into it. It's a relatively cheap stock. And we had the sell signal here. This is called a bursting bubble signal. When you hit a new high on strong volume and you close below the open, that's a bursting bubble candle. See the very strong volume there? So that's when the crowd is chasing it. The smart money is buying it here or here, and the crowd is reacting to news up here and buying, and that was the top for the week. So that's a quick little strategy. I call that an alpha echo, and you can learn more about that in some of those webinars that are coming up in April. I'll go through a little bit more of those details, so make sure you check those out. Just go to stockscores.com, go to Trader Training, upcoming events. They're free. Just register online, and I will see you live where you can ask me questions live in those webinars. Hope you've enjoyed this week's Stockscores Market Minutes. If so, click on the like button. Do you think the market's topping out here? Do you think that there is a risk that we are going to see more weakness? Is the Fed going to crush the stock market? Love to hear your thoughts. And as always, trade well.